really interesting investment opportunity analysed for you by yours truly, H Invests. This company I owned a lot of back in 2023. The stock got a little bit expensive, company was doing very well. I sold out, stock has come back down to a more reasonable valuation. Company continues to post really good metrics and has great long-term fundamental potential. The stock that I'm talking about is Duolingo. What's really nice for me when discussing a company like Duolingo is that everybody has heard of it and it's very intuitive to understand. You know, if you're somebody who is under 40 to 50 years of age and you live in a society that is internet run, there is a high probability that you have heard or even used Duolingo. You've definitely seen somebody use it on the train or know a family member trying to learn a language. And that's actually quite a powerful thing that most people in the connected, developed world know of Duolingo. It's only a $7 billion company. And to cut straight to the point, the big advantage that this company has is it has worked so hard to build a great differentiated brand. Right, that green owl is absolutely iconic, including the notifications and the sound. Sometimes I'll be on a train and I hear someone doing Duolingo. I'll be upstairs in the shower and I hear somebody downstairs doing Duolingo. I'm like, oh, my mate's learning French, my mate's learning Spanish. That is the most powerful thing that Duolingo have. One example of this is in the Barbie movie last year. I know, I did watch that. There was a reference to Duolingo within that movie. Here it is.
What about Dad? You can't just leave him. He'll be fine.
Bolígrafos. Bolígrafos.
Duolingo did not pay for that reference. It was just a joke that the Barbie movie put in there. So it's showing that they understand that most people would understand that joke, meaning that Duolingo is incredibly well recognized. If you go and watch the Q1 2024 earnings call, the first thing you'll see is Duolingo advertising Duo on Ice.
Introducing Duolingo on Ice, the new multilingual musical coming to a city near you. Join Duo the Owl and all of his friends in a 4-hour skate dancing extravaganza. Sing along with songs like Spanish or Vanish.
So they've got this ice skating concert that they're doing with their infamous Duolingo owl, which it immediately perked up my attention, right? I'm interested. Not that I'm going to go and watch the ice skating myself, not that most of the analysts are going to watch it, but what it is showing is that they're really working on solidifying their brand. And that's great because with Duolingo, they're putting some emotion in language learning. This is the genius of what they're doing. Is conventionally language learning was very, very difficult and tough. I learned French and German and a little bit of Latin at school, and it was incredibly boring. I think most people at school, their least favorite subject were languages, unless they had some sort of reason or exposure to learn the language or a really good teacher or passionate parents. Most people naturally gravitated towards disliking learning languages at school. And I get that, it's incredibly boring in the textbook sense, right? But what Duolingo has done is they have made it fun. They have huge gamification on their app that really makes it incredibly engaging. Now, this is genius because our smartphones, we're all addicted to them, right? And I pick up this phone for one of two purposes. It's either I go on this phone and I work and I do something productive, or I go on this phone and I do something social and fun, but maybe it isn't the most productive. A lot of people play games on their phones, for example. Duolingo is a blend of the two. It perfectly sort of captures that intersection between something that is productive and something that is fun. And you have your daily streak of how many days in a row you've been on Duolingo. People want to keep that up. It's a game, and you can complete a task on Duolingo in about 2 to 3 minutes on average. That's what it takes. So when people sit on their phone and they have a spare couple of minutes, maybe they're waiting for a train, maybe they're waiting for the bathroom, whatever it happens to be, this is the kind of time where people say, I want to do something that's semi-productive, I want to feel good about my time, but it also, I want a little bit of fun because I've only got a couple of minutes. I don't want to be thinking about something too strenuously. That is exactly what that gap that Duolingo fulfills, which is genius. It really is. I use other language learning apps as well, I use different ones for like long-term journeys in the car, etc. when I'm driving, and I say, look, this is a really good time to learn a language. But Duolingo just fills that gap where if I've got a few minutes, if I'm waiting for somebody, I will go and get my daily streak. So they've done that incredibly well. There are things that they could certainly do better, but putting together that raw vocab in a fun, easy to construct way is amazing. And you hear that sound, again, it just gamifies it even further. What they've done is they've built a really solid brand that is making education and learning fun. I like the fact as well that they're starting to incorporate a social element into it. You can go on the app, you can see where your friends are at, how much of each language your friends are learning and what their daily XP is, comparing it with them, seeing who is more committed to learning their language. I love that about Duolingo too. As you can see, the company is posting really, really strong growth rates at the moment. They were one of the companies that had sustained incredibly fast turnover and bookings growth. We're talking in the 40s last year. Now it's tailed off a little bit. I think what's happened is Duolingo benefited from a post-pandemic travel boom. But this is the thing, is that the market is organically so set up for them and they've got so many long-term catalysts. Number one, people of my generation, we prioritize travel. You know, in a global world where more people are working from home, more people are self-employed and are starting to sort of be location independent than ever before, language learning and traveling is becoming very important to us. And we're of the generation where we would spend money, i.e. getting Duolingo Premium, on these kinds of things in order to enhance that skill, because we do like to travel and we're a very experience focused generation. That's where we like to spend our disposable income. But aside from that, the world is still getting more global. You know, we're all interconnected in this way. For example, Hamad, who is editing this video, he's over in Pakistan. People are working in teams all around the world, and it's very important to all of us to be able to improve our language ability to connect with people all around the world. And this also goes back to what I was saying earlier, where most people in school, they had that conventional language learning experience of get the textbooks out and like sort through the grammar. That has all changed with Duolingo. They're making language learning fun, right? And that has opened up a whole new market. Before, you could say that the recreational language learning market was much smaller, but Duolingo has made it so much more accessible and so much easier for people to do that instead of thinking, oh, it's 6 p.m. and I'm tired, get the textbook out on the train. It's not that anymore. It's like a few minutes of Duolingo, boom, get my daily streak. Maybe I do it for half an hour, maybe I do a few minutes, but even if I do a few minutes a day, that's still progress. And Duolingo are getting paid from that. So let's now talk about their revenue streams and exactly how the company makes money. All right, so let's delve into these metrics. We've got monthly active users sitting at just shy of 100 million. Now, what I was saying earlier about, most people in this world are in a situation where they may want to learn a language. We've got 8 billion people in the world. Probably 3 to 4 billion are somewhat globally connected or somewhat exposed to more than one language constantly. And from that, you've probably got over a billion, well over a billion or 2 billion people that either need to learn the language or want to learn the language for employment opportunities overseas, to communicate better. Maybe they want to emigrate somewhere. And then also that global generation, that Instagram generation that see people traveling all around the world. We want to do the same, and we spend our money on these experiences, and language learning is all a part of that to improve our recreational experience. So the total addressable market is huge here, and even though they've only got 31.4 million daily active users, that number could easily get to a few hundred million if Duolingo play their cards right. It really could, because the demand for learning languages, I think, is massively increasing for the reasons I've just mentioned. And also, there are a huge subset of people that, particularly the recreational ones, that wouldn't have wanted to learn a language before. Get the textbook out on the train, 1 hour of learning this, no, thank you. 2-3 minutes on Duolingo, boom, I've got my daily streak. Oh, this is fun, let's go on for another 20 minutes, etc. It's made language learning much more accessible. So they've done really, really well with that. And 7.4 million paid subscribers. So they've certainly got a big user base there that they can continue to convert. It's positive that the paid subscribers is at least growing much faster than monthly active users, but it's great to see that the conversion rate is at least staying the same, and if not from a monthly user perspective, going up. Now, the bulk of their revenue is still subscription, 131 million on the quarter, very impressive, but their advertising revenue is doing well, it's creeping up. I would like the growth rate to be a bit higher. You can see there's only growth of 11%, but the important thing is Duolingo have got eyeballs, right? And they will be able to, in the long run, monetize those eyeballs. I'm very impressed with the management team. Louis Van Arm is a great founder. He's a young founder, and they've got a young management team on the whole. Very, very smart guy. He actually founded Recapture, the sort of human verification service, in 2007 or 2009, I think it was. It was one of the two. And he sold it to Google just a couple of years later. So this guy has proven that he can do it. And then in 2011, they founded Duolingo, and he's been there ever since. The earnings calls are some of the most engaging that I watch. And yes, I think the management team is great. The CTO is also still there, but I think above all else, the management team is incredibly well suited to a company like Duolingo. That is the impression that I get when I go on those earnings calls. As I said, the fact that I even started the earnings call with Duolingo on ice and are showing people how they are continuing to cement the really powerful brands they've got with the green owl and the sounds into their overall image really shows me that they are on it. They are on it with creating a long, durable platform. So they've got eyeballs, that's great. Advertising revenue, they're working on that. It's not an insignificant portion of revenue. I'd like the growth to be faster. Duolingo English test is a really interesting one, right? So this is the other thing about Duolingo. The education industry is not particularly innovative, right? As I said before, textbooks. I was studying at uni between 2017 and 2021. Textbooks, printed off bits of paper, not material from the 1950s and 60s. Education is not the fastest moving, most innovative market. So Duolingo basically disrupting quite an archaic industry. And the Duolingo test, basically, it helps people whose native language is not English to prove their level of English competency. And Duolingo have grown this into one of the most widely recognized accreditations for proving English. And I've seen the list of universities and colleges that approve it. Some very reputable ones in the UK already approved this test. And there's a bit of a network effect there where it's like, they've got 28% growth on this, which is good. The network effect comes where the more universities and colleges that start accepting it, obviously people applying for more universities, the more people that are going to take the Duolingo English test. And then the more people that take it, the more universities that are going to accept it. And the more that Duolingo keep investing in their brands, the more they're going to be recognized, and it's just a spiral from there. So again, it's not the biggest part of their revenue, but it's a really nice bonus to have. And it just signifies that the company is not this like one trick pony. You know, they're working on the Duolingo English test. They do a math segment, they do a music segment as well, and they're really trying to build themselves out to become this big educational 21st century platform. So I really, really like that. They've got the in-app purchases as well, growing at a very healthy rate, and of course, superb growth rates overall. So that's basically where the business is at in terms of its growth rates. Another nice thing about Duolingo is it's in a bit of a niche where they're not competing directly with huge tech companies. You know, they're sort of dominating this niche of language learning and being a really great educational tool. So in terms of when you actually look at it on the language side, because of course there are many more educational apps, Duolingo is definitely the market leader. Their closest competitor is probably Babbel. And there's a really good chart that I found here, which is showing the revenue over time. Now, some of this is estimated, but you can see that Babbel was actually the market leader, at least by revenue, in 2018, and Duolingo has overtaken them and actually continues to grow their top line at much faster growth rates, which is really great to see. Now, Babbel do have a lot of revenue, but this other chart is estimating the market share for 2023, and you can see that even though Babbel makes a lot of revenue, this market share is more going by actual users, and Duolingo just blows Babbel out the water when it comes to that. 10 times the amount of reviews on the App Store. Both Duolingo and Babbel are 4.7 out of 5, by the way, on the App Store with a whole load of reviews. They're putting Duolingo at about 60% market share. So they're saying, yeah, even though Babbel has a lot of a lot of revenue. Babbel basically only do subscription. Meanwhile, Duolingo, they've got the eyeballs, they just need to monetize them. And that's a much easier position for Duolingo to come from. So they've got way more users. It's much easier to convert a free user to a paid user than to get someone from not being a user at all straight to a paid user. As I've said before, I personally use multiple language learning apps and I feel like they do different things. Duolingo is really great for just like smashing vocabulary, getting fast exposure to new words and learning the basic structures of sentences. It's not amazing for solidifying really particular things and practicing conversations. So I think that each language learning app certainly has its place. But this is the point, is that on the one hand, the switching costs are not that high. On the other hand, people are passionate about learning languages. They will tend to use more than one app for different things if they're really, really committed to it, right? And they do have some level of switching costs. As I say, they make a game out of it. They have streaks. You can play with your friends. You can see how much XP your friend has got. Obviously, there's the switching cost of like Duolingo knows exactly where you're at with the language, so they can then tailor your language experience best. You know, you're basically almost playing a game, if you will, where you've got like 1,000 different mini 3-minute courses within a language. And if you get to course 263, meaning that course 264 is like absolutely perfect for your ability, it's going to be frustrating to then switch to another app where that app is going to take a lot of time to actually understand your exact level of ability within that language. So that is a switching cost that Duolingo have. Network effect, I don't think so much. Maybe on data a little bit, because they are the market leader. So they've got like more language data and they can improve their platform by sort of getting feedback and seeing what is working and what is not working. I do believe there's a small network effect around the Duolingo English test. Aside from anything else, that just signifies to me that management really understand the ancient aspects of the conventional university system, and they're trying to innovate away and really bring some new fun to education, which I like. And of course, then the most powerful is their brand, which I've already spoken about a lot, but that is the glue that ties everything together. I also think this is smart because one risk for something like Duolingo is, you know, we've got large language models. I could technically sit down and learn a language with ChatGPT, and I have tried to do that, but they're not going to match Duolingo's fun aspect in 2 seconds. You know, the sounds and the characters and the owl and the streaks and the games and the different ways of doing things, they're not going to match that experience in a short space of time. And that's why I think it's really smart that Duolingo's management team have built up a really, really good brand, because even if a large language model comes along and it's got superior AI and really good ability to like understand exactly how far you are within learning the language, Duolingo, they have this big gamification aspect, which I think that's going to be much more difficult for an LLM to catch up to easily. All right, so turning to valuation, here we've got enterprise value to gross profit. This is what I'm saying about it being, you know, the cheapest that it's been in a while. Their growth rates have been incredibly strong. You know, when you're growing at 45% on your top line and your gross profit line, because gross margins are stable, they're averaging about 73% at the moment. Of course, if your share price grows at less than 45%, then those ratios on the top line, they come down if the share price doesn't keep pace with the growth, right? So in as much as the stock has gone up a lot and then now come down a little bit, the ratio hasn't expanded that much because of how fast they've been growing. Now they are sort of slowing a little bit. Duolingo has bookings and revenue growth. It's always important to look at bookings. That's the one that will lead revenue growth, and their bookings guidance, I think, is 30 to 32% for the full year of FY24. So it's still fast. But what we do want to bear in mind is now they've come off this 2023 high of COVID's finished, everyone's traveling, everyone's language learning. We want to make sure that that growth rate, it doesn't go from 40 to 30 to 20 to 15 very quickly. So from this discounted cash flow, this is what I've put. So for FY24, still 38%. This is revenue growth, bear in mind. The bookings growth will sort of materialize into revenue growth within the next year. Then analysts have got 28% and then 25% at a pretty stable free cash flow margin. Really, really high. They did 26% for the full year last year. They're forecasted to do 34%. That's another thing. Duolingo aren't burning money. they're in a net cash position. As you can see on this DCF, you know, they've got minus 772 million of net debt, which actually isn't insignificant on a 7 billion market cap. That's pretty impressive. So they're a financial fortress. I think that that is certainly going to help them if they continue to grow, because Wall Street are not going to be worried about them burning a load of cash. That's good. Obviously, the high gross margins certainly help with that. And it's great that they've been stable, right? So Wall Street are forecasting these free cash flow estimates you can see in orange. And then long term, I've got these growth rates sort of in the early 20s down to the teens and tailing off at 13% growth. I mean, from there, that gives you a present value of 289. And as of time of recording, the shares are trading at 168. So that is a really, really good level of upside. Now, I'm not saying this DCF is massively conservative. What I'm saying is that they've had extremely impressive growth rates, and the company are continuing to attack multiple revenue streams going forward with a hugely fast growing base. If they can sustain these growth rates, then the shares are like really, really deeply undervalued right now. The share price is also very volatile. So, you know, the shares can come down and it can get cheap very quickly. The shares can go up and it can get expensive very quickly. This is certainly a stock that I've traded in and out of a lot. I was buying at 100, I was selling at 180, you know, it came down, I was buying at 140, I was selling again at 200, and now it's getting to a point where they're continuing to grow very well. I've been impressed with the management. They know what they're doing. They really are very focused on building a long-term, durable, recognized brand. I'll reiterate the point. The fact that so many people have heard about Duolingo and it's so widely recognized for a $7 billion company in market cap, that is significant for them. It really is. So again, you know, if they were to grow sort of mid-teens, long run, then this would probably be showing about fair value right now. But if they can keep up the growth, there's a really good deal here. So the important thing to consider is to watch the quarters going forward, watch the guidance going forward, and see if they hit these analyst estimates, you know? So if they can hit sort of 27, 28% bookings growth, if they start forecasting that for 2025, and if they start forecasting like at least 25% bookings growth for the next year after that, then these shares are incredibly cheap. If they forecast low 20s or 20, then the shares are quite cheap. If they're forecasting below that, then my opinion is that the bookings growth is tailing off too quickly and the company has a problem. But from the metrics now, it looks very strong. That's my opinion on Duolingo. Let me know what you guys think, and thank you very much for watching the video.